The markets are undergoing significant changes in 2025. Historically, we've observed bear market cycles approximately every 10 to 12 years, characterized by market drops exceeding 20%. However, these cycles are accelerating. In the past 6 to 7 years alone, we've witnessed multiple bear markets, a significant alarm for traders and investors. The first bear market was in 1929, the Great Depression. Then, after 8 years, in 1937. After 35 years, in 1974. Next, after 13 years, in 1987. The dot-com bubble in 2000. The global financial crisis in 2008. And in 2020, the COVID crisis. All these bear markets typically occurred every 8 to 12 years. But since 2020, we've witnessed multiple bear markets in just 5 years. The 2020 COVID crash. A bear market from 2022 to 2023. And now, in 2025, another market crash due to tariffs. But it's not just about the market dropping. On daily charts, we've seen news events causing 10% drops weekly. Markets would plummet, recover in a few days, then drop again. This pattern repeated 3 to 4 times consecutively. Such volatility has led many traders to incur significant losses. Our traditional investing or trading styles may not yield the same returns. In this ever-collapsing market, investing with margin accounts is becoming increasingly risky. You never know when one bad news event will cause the market to drop drastically, potentially wiping out your entire capital. Trading is also becoming more challenging. We've seen huge spikes in volatility. If you don't adjust your position size in response to rapidly increasing volatility, you could incur losses far greater than your average. By the time you realize what's happened, it may be too late. But what are the reasons behind these market fluctuations? And how we can manage our risk and make profit in these volatile markets? The reasons for increased market volatility after 2020 are: rise of retail investors. In the pandemic era, we saw a surge in retail trading, with individual investors leveraging online platforms to participate in the markets. This influx has led to unexpected market movements, challenging traditional investment paradigms. Technological advancements and algorithmic trading. The proliferation of algorithmic and high-frequency trading has increased market sensitivity to news and data releases, leading to rapid price fluctuations. Elevated sensitivity to economic data. Markets have become more reactive to economic indicators, with even minor data releases causing significant market movements. Geopolitical tensions. Events such as trade disputes and conflicts have heightened investor anxiety, leading to abrupt market reactions. Now let's talk about the solutions and strategies we can use as a trader or investor. Diversify your portfolio. Spreading investments across various asset classes can mitigate risk. Diversification ensures that poor performance in one area doesn't drastically impact your overall portfolio. Stay informed and adaptable. Regularly monitor economic indicators, geopolitical developments, and market news. Being informed allows for timely adjustments to trading strategies in response to evolving market conditions. If you're buying the dip, start taking profits when the market goes up. Don't overstay your welcome by holding too long and giving all your profits back. Markets are dropping frequently, creating more opportunities to profit from each decline. You just need a solid exit plan for your trades. For intraday traders and scalpers, monitor the VIX or volatility index. When you see volatility rise, reduce your position size to prevent significant losses. Avoid trading during news events. Wait for the volatility to settle down before entering trades when prices become more stable. Conclusion. The market landscape in 2025 is evolving rapidly. To navigate these changes successfully, traders and investors must adapt their strategies, remain vigilant, and be prepared for increased volatility and shifting global dynamics. If you found this video insightful, please give it a thumbs up and share it with fellow traders. Your support helps us continue to provide valuable content. Don't forget to subscribe and hit the notification bell so you won't miss our upcoming videos on navigating these volatile markets. Stay informed, stay prepared, and remember, in these changing times, adaptability is key. Thanks for watching.